Hi everyone, today we're going to quickly talk about PCE data, as well as the max pain result, as well as the charts, and my results for the day and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So PCE data came in much lighter than expectations, 0.2% for the month. 4.1% from a year ago, and everything looks pretty good on inflation. We've been seeing this for a while, continuing to get better than expectations on inflation. And this comes right after the Bank of Japan information that they might raise rates, which crashed the markets yesterday, and then we got good data today, and the markets basically retook all of that lost ground. They mention here goods prices actually decreased by 0.1% for the month, while services rose 0.3%, food prices also falling 0.1%, and energy increased 0.6%. So we're getting good data even with energy going up pretty substantially. Moving over to max pain, you can see we did get a slight adjustment on that 451 call wall, ended up being that 460 high, stuck between 450 and 460. We got kind of a mid-range finish like I kind of expected, but honestly it was still a little bit more bullish today than I expected. Moving over to the charts, you can see that whipsaw that we got, huge bearish candles yesterday, gap up, super strong rally, hitting resistance and then selling off slightly. Still consolidating in this range, and we've been in this range all the way since 18 July now. You can see that multiple days in the same range. Momentum basically zero, RSI still decreasing. So you could argue that this is still just consolidating and waiting for that turning point on the SPY. It does look weaker here than on the NASDAQ. Moving over to the NASDAQ, you can see that same thesis. Big move down yesterday, gap up, rally right to that same high. So a little bit more strength here, testing yesterday's high. Still rejecting from that level, and we did not get above it. So you could argue this is a little bit weak at resistance here. And looking at the daily chart, you can see we've been in this range for a while. Momentum stepping towards bullish, RSI still just barely below the SMA. So you could potentially look for a rejection from this point. Honestly, these big red candles the last week or so have been pretty convincing in my opinion, and they are at a clear level of resistance. Moving over to the Russell and the Dow, gap up, rally, held in the zone right at that same level that we've been at, stuck between 195.15 and 198.75. Dow also rallying up to trend resistance and then actually broke down a little bit more than the other major indices, showing more weakness here today. Moving over to the SPY divided by the M2 money supply, I think this is the most important chart right now. You can see we are at all-time highs, testing that 2205 level, the same one that we broke down from last time. And this is also the same high from the pre-COVID high. Multiple tests of that level, and every time we get into the zone, we get significant breakdowns. Moving over to Apple and Tesla, Apple pushing up into these highs once again, rejecting from that high, still consolidating in the zone. You could argue that the trend is slightly bullish, but we really have not established a new high from these previous highs yet. Tesla also rallying, got above resistance, still holding in this zone. You can see the EMAs are starting to consolidate. If this does not break higher and get above the 55 EMA soon, then you could be looking for a push in either direction as we continue to consolidate right around this highly traded zone at 266. Moving over to staples and discretionary, staples continuing to rally here, throwing some wicks to the upside at the most recent highs. Discretionary did rally, but did not get above yesterday's high, still chopping in this zone just above 170.68. Moving over to breadth, you can see the 50-day average absolutely flat at the 21 EMA. Momentum continuing to weaken here, definitely interesting. 200-day average did show a little bit of strength, but momentum got more bearish. RSI ticking up slightly, but still looking pretty weak as we've broken out of this structure here, and I am a little bit more concerned to the downside than looking for upside opportunity. Moving over to the dollar here on the 4-hour chart, you can see that push off of the 55 EMA on the 4-hour chart that we got, pushing up to the 200 SMA, wicked that level, showed a little bit of weakness, but the 21 EMA held, rallying a little bit into the close, dojied on the day, so at a level that makes sense in terms of resistance, right at the low from 16 June as well as 22 June. You want to see it get above that, obviously, and hold if it's going to rally. Could pull back a little bit more from here, but at this point it still looks bullish in my opinion. Finishing up with the volatility indices, you can see still nothing going on quite yet. I thought the move higher yesterday was going to start this kind of upswing, but then we got another retrace right back down to these lows on the VIX. Move index not doing much of anything. No clear direction on volatility yet. Moving over to my accounts, I did very bad on the day. Definitely got chopped up on the NASDAQ and it did not work out very well. Russell obviously rallied and I left that alone. On Monday, I'll look to see if I can roll these 194s out and see if that's worth it. Otherwise, on the NASDAQ, I tried to adjust to the up move. Then we got chopped up at my level. Couldn't really get on top of where the market was going. Had some pretty wild swings. And like I said, I thought the down move yesterday was a pretty good indicator of where we were going to be heading. And then the market decided to rally super aggressively on the PCE data. So overall, I am still neutralized on the NASDAQ. We've been holding in the same zone. And I think you have to trade it like a range at this point. It seems like the trend has kind of cooled and we're just consolidating in the zone. Similarly on the Russell, a little bit more bullish, just because of the most recent underperformance. Let me know down in the comment section whether you think inflation is done and we don't have to worry about it anymore, or are we going to continue to see hikes and will it continue to plague the markets? Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.